Hi, this is Jeffrey Kurt Financial Group. Today's Monday, May 12, 2025. And the stock markets are celebrating today. We got news over the weekend that a potential trade deal gets done between the U.S. and China. And certainly there's a lot of details to be worked out, but it may lift, a big piece of uncertainty off of the geopolitical environment as well as, the global economy. So, we'll see how the details get, done and how fast they do, because again, it's a big, I think a complicated deal. Hopefully the structure's in place and we just have to put a little more detail into the agreements and like that. So, the stock markets have been trading well today, been trading well last week too. And kind of, I think it's interesting, and just as a side point of how emotional the markets have been recently, stock market, bond market, commodities, the whole thing. The beginning of April, we announced tariffs, and the stock market sells off pretty hard. It's going to be the worst economy ever, the worst April, in history for the stock market, the worst start to a president's office, in many years and all that stuff. And now we bounced back. And I think it's just, points towards, again, how emotional, and also, within the emotions, and aside from that a little bit, is the algorithms that just trade perhaps on, the motion and the momentum and the direction and like that. So the one of the things that I think is pretty important is that bond yields have been moving back up. And, back at the beginning of April, tariffs going to be inflationary. Bond, interest rates have to go up. And then, the economy's going to be doing okay, and the Fed's not going to cut rates. So, bond yields and interest rates move up. And now, with the deal being done, the economy, the global economy is going to do well, and, interest rates move up. I don't know if it's, any of those or all of those are the purpose or the reason behind this, but I think there's a big thing that really not many are talking about, and it's really, the federal deficit, the federal government budget deficit. When they're working on a deal and they're working, but it's going to be a $3 trillion deficit. And, no one appears to be really, trying to attack that. And I think it's going to be, maybe the market's saying, what, we're not financing that deal at these interest rates. Interest rates have to go higher for you to, borrow money. And that may be it. I think it's something to keep an eye on. We'll do that. Keep it in mind and try to talk about that as well. So we'll be back on Wednesday. Thank you for listening. We'll see you then. Goodbye.